Welcome to Daily Crypto episode 23. Today we're diving straight into the latest movements and trends shaking the cryptocurrency market. We've got a snapshot of the current prices for the big players and a look at the news that's driving these changes. It feels like we're at an interesting crossroads, seeing some expected pullbacks alongside, well, surprising surges and institutional moves.
Absolutely. Let's kick off with where the major cryptocurrencies are currently positioned. Bitcoin is currently at $103,651, showing a slight decrease.
Okay, slight decrease.
Yeah, this minor dip could reflect some investors, taking profits after its recent climb. Ethereum is trading at $2,527.35, also with a minor decrease, maybe following a similar pattern of consolidation.
And it looks like BNB has seen a more significant downward move, currently priced at $654.30.
Mhm.
Solana is at $174.43, experiencing a slight decrease, and XRP is trading at $2.54, which that's a notable decrease. So what might be the bigger picture here? Is this a general cooling off after a period of upward momentum?
It certainly appears that way for the majors. We often see these periods of consolidation where the market just, takes a breather.
Right,
It's worth noting that these small percentage changes, while significant in dollar terms, need to be viewed within the context of the larger market cycles we've observed.
right. Now let's talk about the meme coin landscape. It's always a roller coaster.
Huh, yes it is.
We're seeing some pretty significant fluctuations here. Shiba Inu is down quite a bit at 0.00000000157.
Wow, yeah.
Pepe is also trading lower at 0.000000014, and Bonk has decreased to 0.000000226. Even Dogwa Hat is slightly down at $1.18, and Popcat is showing a decrease. It's social trends, community sentiment, you know how it is.
Whoa.
The meme coin market is incredibly sensitive to social trends, community sentiment, you know how it is.
Totally.
These sharp drops really highlight the speculative nature of these assets. Unlike, say, more established cryptos with underlying tech or use cases, meme coin values are often driven by hype.
And hype can disappear fast. Exactly. Which can be fleeting. These declines could simply indicate a shift in online attention or maybe a move towards newer, shinier coins.
Speaking of shiny, Elon Coin has experienced a massive 500% rally.
500%.
Yeah, that's the kind of jump that catches everyone's eye.
Hmm.
There's some chatter about its connection to something called Believe. We don't have the specifics on that link, but
Yeah.
a move like that suggests something significant has captured market attention. What are your initial thoughts on such a dramatic surge?
A 500% rally is definitely eye-catching. These kinds of explosive movements often stem from a sudden influx of interest, whether it's due to a specific announcement, a viral trend, or even just speculation about a potential partnership.
Right.
The connection to Believe, even without details, likely holds the key. It's a reminder of how quickly things can move in the crypto space, and as you said, it often reflects strong market sentiment around a particular narrative.
Absolutely. Now, let's shift gears a bit. We're seeing traditional finance continue to sort of edge into the crypto world.
Mm.
The M&G-backed crypto venue, GFOX, has launched in the UK, focusing on crypto derivatives. This feels like a significant step towards greater institutional involvement.
Absolutely.
What does this development tell us?
This is a really important indicator of the growing maturity of the crypto market. Crypto derivatives are essentially contracts whose value is derived from an underlying cryptocurrency, like Bitcoin futures or options.
Okay.
The launch of a regulated venue like GFOX, backed by a major player like M&G, signals that institutional investors are increasingly looking for ways to gain exposure to crypto through more familiar financial instruments.
And within established regulatory frameworks, too.
Exactly. And that can bring more liquidity and, ideally, more stability to the market over time.
That's a great point. Another angle we're seeing is the ongoing discussion around Bitcoin's potential as a store of value, with some analysts comparing its market cap to gold.
The digital gold narrative.
Right. While it's a theoretical exercise, what are some key factors to consider when making such a comparison?
Well, comparing Bitcoin to gold really highlights that narrative. Both are seen by some as hedges against inflation, stores of value outside traditional finance.
But they're fundamentally different.
Very different. Their underlying characteristics are quite different. Gold has this long history, physical utility, seen as stable. Bitcoin is digital, limited supply, growing adoption for transactions, and as a tech platform. For Bitcoin to truly rival gold's market cap, we'd likely need to see continued institutional adoption, greater regulatory clarity, and just a persistent belief in its long-term value as a scarce digital asset.
Makes sense. We also have an interesting perspective highlighting stablecoins as a potential gateway to mainstream crypto adoption, maybe in 2025. Why are stablecoins being positioned as this crucial on-ramp?
Stablecoins, well, the name says, right? They're designed to maintain a stable value, usually pegged to something like the US dollar.
Right.
This price stability makes them far more appealing for everyday transactions and, frankly, a less volatile way for newcomers to interact with the whole crypto ecosystem.
Less intimidating.
Exactly. They bridge that gap between traditional finance and the more volatile crypto world. Makes it easier for people to understand and use digital assets without the fear of those drastic price swings. Increased regulation and integration into existing payment systems could really accelerate their mainstream adoption.
Okay. On a different note, Pi Network experienced a significant drop, over 25%, ending a previous rally.
Ouch.
Yeah. Projects still in their early stages often see these kinds of volatile swings. What factors might contribute to such a sharp correction?
Well, for projects like Pi Network, which are still, in development, maybe haven't fully established utility or widespread adoption, price movements can be heavily influenced by speculation and community sentiment.
So maybe hype wearing off?
Could be. A significant drop like this could be triggered by various things. Delays in the roadmap, negative news or rumors, or simply profit-taking by early adopters after a price increase. It just underscores the risks with very early-stage projects.
Right. Now, Tether, a major stablecoin issuer, is introducing a gold-backed stablecoin, XAUT, in Thailand as a hedge against inflation.
Interesting move.
It is fascinating, blending traditional and digital assets. What are the potential implications of a stablecoin backed by actual gold?
This is strategic for Tether. By offering a stablecoin backed by a physical asset like gold, they're providing an alternative for investors who want to hedge against, say, fiat currency devaluation.
And gold is the traditional safe haven.
Exactly. Gold has historically been seen that way during economic uncertainty. Launching this in Thailand, a region with growing crypto interest, makes a lot of sense. It could attract investors looking for a stable digital asset with a tangible, well-understood underlying value.
We're also seeing reports of significant whale activity in Bitcoin, large holders accumulating more, even as some retail investors might be selling.
The classic divergence.
Right. This often sparks debate. What could be driving these larger players to increase their Bitcoin holdings right now?
When we see these large entities, the whales, increasing their Bitcoin holdings, it typically suggests a strong, long-term bullish outlook.
They're playing the long game.
Often, yes.
Yeah.
These investors usually have a deeper understanding of market dynamics, maybe anticipating future price appreciation. The fact this is happening while some smaller retail investors might be selling could indicate different risk tolerances or investment horizons.
So whales see dips as buying opportunities.
They might, yeah, reinforcing their conviction in Bitcoin's long-term potential.
Okay. XRP seems to be showing some renewed strength. It hit a 2-month high, and some analysts are suggesting a potential target of $3.
Wow, $3.
What factors might be contributing to this positive momentum for XRP?
Well, XRP's price action is often closely tied to developments in its ongoing legal case.
Ah, right, the SEC case.
Exactly. Positive news or even perceived movement towards a favorable resolution can significantly boost investor confidence. Plus, broader market sentiment and technical trading patterns also play a role. That breakout momentum you mentioned suggests technical traders are seeing bullish signals.
Meanwhile, Ethereum's rally near $2,580 seems to have met some resistance. Reports of holders taking profits. Pretty common scenario, right?
Very common. When an asset like Ethereum goes up significantly, it's natural for some investors who bought lower to sell, lock in those gains.
Creates selling pressure.
Right. It can create selling pressure, leading to resistance at certain price points, a temporary stall in the upward momentum. It's a healthy part of market dynamics, doesn't necessarily mean a long-term trend reversal.
Okay. In a landmark moment for the industry, Coinbase stock saw an 8% jump as it became the first crypto company included in the S&P 500.
Huge news.
It really is. Major mainstream recognition. What are the broader implications here?
Inclusion in the S&P 500 is a huge milestone for Coinbase and really the entire crypto space. It signifies a greater level of acceptance, integration into traditional financial markets.
More visibility, too.
Definitely. Being part of this benchmark index increases Coinbase's visibility to a much wider pool of institutional investors, could lead to increased investment in the stock. And it just lends further legitimacy to the crypto industry overall in the eyes of traditional finance.
Interestingly, data reveals that nearly half of all stolen cryptocurrency remains unspent. That's a surprising statistic.
It is surprising, isn't it?
What does this suggest about tracking or laundering these assets?
Well, the fact that such a large percentage remains unmoved highlights the increasing sophistication of blockchain analysis tools and security measures.
So it's harder to move it.
Exactly. While hackers might succeed in the initial theft, converting those digital assets into usable fiat currency without leaving a trace is becoming increasingly difficult. On-chain analysis lets investigators track the funds on the public ledger, making it much harder for criminals to launder large amounts undetected.
Okay, back to the ever-entertaining world of meme coins. Dogecoin volume surged significantly.
Still got its loyal following.
Definitely. But Pepe and Remedix are also vying for attention. There's even talk comparing Dogecoin and something called Lightchain AI as potential breakout assets for 2025. Competition's fierce.
The high trading volume in Dogecoin speaks to its established community, absolutely. But the emergence of new ones like Pepe and Remedix shows that constant search for the next viral sensation in this, let's face it, highly speculative market segment.
Right.
The comparison with projects like Lightchain AI, which probably has a different tech focus, highlights the diverse range of assets capturing interest, even within the broader meme coin category. Trends here can just shift so rapidly.
And Bitcoin Pepe confirmed its listing across major exchanges in May. Does this increased accessibility likely mean more trading activity for this specific meme coin?
Typically, yeah. When any crypto, including a meme coin, gets listed on major exchanges, it becomes more accessible to way more traders.
Increases liquidity, volume.
Usually leads to higher trading volumes, at least initially. But for a meme coin like Bitcoin Pepe, sustained activity will still heavily depend on ongoing community engagement, social media trends, and just the overall market sentiment towards meme coins in general.
Got it. With Bitcoin's price climbing, we're seeing renewed interest in Bitcoin mining contracts. Seems like mining profitability is closely linked to Bitcoin's value. Can you explain that?
Yeah, it's directly tied. Miners are rewarded in Bitcoin for verifying transactions and adding blocks to the blockchain.
So higher Bitcoin price means higher reward value.
Exactly. When the price of Bitcoin goes up, the value of those rewards increases, making mining more profitable. This increased profitability can then incentivize more miners to join, or existing miners to expand, leading to greater interest in mining hardware and contracts.
Looking at the global stage, crypto leaders are set to meet in Dubai for the 30th edition of HODL. These industry gatherings, they often seem important for connections and innovation, right?
They really are. These global events serve as vital hubs for networking, collaboration, sharing ideas among leaders, developers, investors, policymakers, everyone.
Driving things forward.
They can be catalysts for new partnerships, discussing emerging trends, even shaping regulatory frameworks. These meetings definitely contribute to the overall growth and development of the crypto space.
We're also seeing the emergence of a global cloud mining platform as a significant player. Cloud mining offers an alternative for people who want to mine but maybe don't want the hardware hassle.
Right. Avoids the upfront cost and technical complexity.
What are some key considerations for someone looking into cloud mining?
Cloud mining platforms offer a way to earn Bitcoin without managing hardware directly. But it's crucial to approach them with caution.
Due diligence is key.
Absolutely. Potential users should carefully research the legitimacy, the reputation of their provider, understand the contract terms, fees, payout structures, and be aware of the risks. Profitability can be hit by Bitcoin price swings and changes in mining difficulty.
Okay. In a notable development for stablecoins, Tron has apparently surpassed Ethereum in the total supply of USDT. That's a major stablecoin.
Yeah, USDT on Tron.
What does this shift potentially indicate about activity and preferences within the stablecoin ecosystem?
The fact that Tron now holds a larger supply of USDT than Ethereum suggests more users are choosing the Tron network for transferring and holding this specific stablecoin.
Why might that be? Fees? Speed?
Could be factors like lower transaction fees or faster transaction times on Tron compared to Ethereum, making it maybe a preferred choice for certain types of transactions, especially with stablecoins. It just reflects the evolving landscape of blockchain usage and the competition between different networks.
And speaking of profitability, with Bitcoin's price hovering above $102,000, reports indicate miners are currently seeing a significant 182% profit.
Wow, that's substantial.
It is. How sustainable are these levels of profitability for miners?
A 182% profit margin is indeed significant, and yeah, it's directly driven by the current high price of Bitcoin. However, Mining profitability is inherently volatile.
It won't last forever at that level.
Probably not. It can
Okay.
be impacted by fluctuations in Bitcoin's price, increases in mining difficulty, which happens as more miners join, and of course changes in energy costs. So while current profitability is high, miners need to factor in these potential changes for long-term decisions.
We've also seen some concerning news on the security front. ZK Sync X accounts were reportedly hacked. Yeah, to promote fake SEC warnings and malicious airdrops. And Curve Finance is battling a DNS hijack after an X account breach. These incidents really underscore the need for vigilance.
They really do. A stark reminder.
What are the key takeaways for users from these events?
These security breaches are just a constant reminder of the persistent threats out there. Social media accounts, even from reputable projects, can be compromised and used to spread misinformation or malicious links.
So be skeptical.
Extremely cautious
Hmm.
about clicking links, providing personal info based on social media posts, always verified through official channels. And the DNS hijack with Curve Finance highlights vulnerabilities at a different level, emphasizing the need for robust security across all parts of the digital infrastructure.
Okay. Animoca Brands, prominent in blockchain gaming and NFTs, is reportedly considering a New York IPO.
Interesting.
Yeah, with speculation the timing might be linked to anticipating pro-crypto U.S. administration policies. What could an IPO like this signify for the broader crypto and NFT markets?
An IPO by a major player like Animoca Brands in the U.S. would be a significant validation for the blockchain gaming and NFT industries. It would bring more traditional investment into these sectors, increase their visibility in mainstream finance.
And the timing aspect.
The potential timing related to anticipated regulatory developments suggests a strategic approach to accessing public markets. It could potentially pave the way for other crypto-native companies to consider similar moves.
Bitcoin seems to be consolidating below the $106,433 mark. Some analysts point to a potential breakout towards $127,000 if this resistance is overcome. For chart watchers, what makes that $106,433 level significant?
That level, $106,433, is likely being watched as a significant area of historical price action, a place where selling pressure has previously been strong.
A hurdle to clear.
Exactly. If Bitcoin can break decisively above that level and hold it, it could signal a shift in market sentiment, potentially trigger further buying, maybe leading towards that $127,000 target. These technical levels often act as psychological barriers for traders, and breaking through them can lead to significant price moves.
DeFi Development Corp has reportedly increased its Solana holdings quite significantly. That suggests strong confidence in the Solana ecosystem.
Yeah, a big bet on Solana.
What aspects of Solana might be attracting this level of investment?
Well, Solana has gained considerable traction because of its high transaction speeds and lower fees compared to some other major blockchains. That makes it attractive for DeFi applications, NFT projects.
So performance and cost.
Largely, yes. A significant increase in holdings by a firm like DeFi Development Corp likely reflects a belief in Solana's tech advantages, its growing ecosystem of apps, and its potential to capture a larger share of the decentralized web.
Cardano is showing some signs of a potential bullish reversal, a possible rally if it breaks above $1.13. After moving sideways for a while, could this be a catalyst for Cardano?
The formation of bullish reversal patterns on charts, plus a break above a key resistance level like $1.13, can often indicate a momentum shift from selling to buying pressure.
So potentially the start of something bigger.
It could be. If Cardano can successfully break and hold above that level, it might signal the start of a more significant upward trend. But it's important to remember, technical indicators are just one piece. Broader market conditions and fundamental developments within Cardano itself will also be crucial.
Pump.fun, a platform known for meme coins, is introducing a 50% revenue share for meme coin creators. Interesting way to incentivize participation.
50%. Wow.
What are the potential benefits and drawbacks of a model like that?
Offering a significant revenue share like 50% can be a powerful motivator for creators to launch and promote their meme coins on Pump.fun. It aligns the interests of the platform and the creators, potentially leading to a more active, diverse ecosystem.
But the downside?
Well, it could also incentivize the creation of low-quality or even spammy meme coins, right? And you'd have to wonder about the long-term sustainability of such a high revenue share model.
Good point. And finally, we saw XRP briefly surpass USDT in market capitalization. While USDT is usually dominant, that temporary shift is noteworthy.
Very noteworthy.
What does it tell us about current market dynamics and sentiment towards XRP?
For XRP to briefly overtake USDT in market cap is significant. It highlights the strong, recent positive sentiment and trading volume around XRP.
Driven by those factors we mentioned earlier.
Likely. While USDT usually holds a much larger market cap because it's used so widely for trading and liquidity, this temporary flip just underscores that intense investor interest in XRP, probably linked to the legal case news and technical momentum. It's a powerful snapshot of current market forces.
That's a wrap on today's crypto news. The market continues to be dynamic, with notable price shifts and ongoing developments across various sectors, from meme coins to institutional adoption.
Always something happening.
Indeed. Join Daily Crypto for more real-time market updates.